Hello, everyone. Happy Friday to you. It's Happy Friday, the last trading day of the week. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm very excited to be with you here this morning as we are going to be taking another fresh new look at the financial market. And most importantly, this week has been so tremendously profitable for all of us in this community across all the assets on our watch list. We did very well on the US All Sports, scooping in over 600 pips in profit. On the XAUUSD, we also did phenomenally well, scooping over 1,600 pips. And of course, on the GBPUSD, that one too is not doing bad at all. First of all, congratulations to everyone who has been part of this profitable journey this week. Kudos to you, and well done on being patient and consistent with the analytical approach we have adopted. Well, today is the last trading day of the week, the final day of the trading week. And of course, we do know that on days like this, there is this psychological expectations among market participants as they round off on their trading activities ahead of the weekend. And usually, it is expected that those who had bought or probably sold at a very lucrative price and they've made a significant amount of profit would likely want to start taking in some of the profit off the market, and this usually reflects on the chart as a potential reversal setup ahead of the weekend. So we are going to be taking all this into consideration while we review the current market conditions. Well, in preparation for today's trading session, I have already conducted a comprehensive analysis on these assets on our watch list. And of course, for those of you who are with me on both my TradingView and Telegram platform, you definitely must have gotten an update as to how we are going to be managing ourselves for today's trading session. So today, during the Forex Morning Mastery, we will be expatiating on that and see how we can strategically position ourselves ahead of the next move using simple and fundamental tools such as trend lines, key levels, and of course chart patterns to unravel the potential trajectory of price action for today. For those who are joining us for the first time, you are highly welcome on board. I'm always glad to have newcomers in the house, as it shows that the community is gradually growing. Now, you may be wondering what this is all about. What is it that we really do on the Forex Morning Mastery? Well, first of all, you need to understand that I usually share a couple of videos during the course of the weekend, which usually happens to be the assets I'm planning to trade for the upcoming week. And what we do during the Forex Morning Mastery is to do a follow-up detail on all of this video, strategically positioning ourselves for the next move in preparation of both the New York and the London session. Now, the Forex Morning Mastery usually kickstarts 8:05 a.m. UTC, 9:05 a.m. West African time. So I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. Now, my aim here, my main purpose for this Forex Morning Mastery is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us, the better you will become at understanding our analytical approach and utilizing the information you gather in this community to enhance your own trading decisions and strategies. So once again, I welcome you on board and I encourage you to engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that are likely going to be affecting the market sentiment for today. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors usually affect the market sentiment and of course reflect on the chart as price action. And so what we will be doing here is to know when the timing of this event, so when is it going to happen, and then use that to identify structures that we can use to guide our decisions as the event draws near. Now, so far this week, and based on the asset we have been monitoring since the beginning of the week, we have been focusing on features from the United States and the United Kingdom economic docket, and we've streamlined our expectation, our watch list to high impactful events. Now, for today, Friday, the last trading day of the week, we have a handful of high impactful events from both the United States and the United Kingdom economic docket. And this is a publication by a very renowned organization, that is the S&P Global. Now, for those who don't know the S&P Global is a prominent financial services company known for providing credit ratings, research, and analytics. Its impact on market sentiment is substantial, as its credit rating and market insight can influence investors' confidence, affecting the perceived risk of various financial instruments. Now, they are going to be doing some publications on some major sectors in both economies. So the first one here is the composite PMI, and then we have the manufacturing PMI and the CIPS services PMI from the United Kingdom economic docket. Then from what we have from the United Kingdom, the data that economies are expecting will be the actual figure are actually a little bit higher than the previous month. Now, if you look at the composite PMI here, you can see we have 50.7 and economists are projecting 50.9. Now, the other one for the manufacturing PMI is 47.2 for the month of November, and economists are projecting 47.5. And the same thing with the service sector, which is known as the services PMI as well. We have 50.9 for the month of November and 51 for the month of December. So from what we can see here, there is some positivity in the air, as all parameters here are suggesting that there is going to be an expansion from the actual figure. So we'll still continue to monitor price action ahead of this event, and of course also know what the actual data will be. Will it be just as expected, below expectations, or even beyond expectation? Then fast forward to about 7 hours from now, we are going to be looking forward to the manufacturing PMI and the services PMI from the United States. And from the data we have here, based on what economists are projecting, things are not really looking well for the United States economic docket. Now, if you look at the data for the manufacturing PMI for the month of November, you will see it came in at 49.4. And what we have here as economist projection is 49.3. Then for the services PMI, we have 50.8 and economist projection is at 50.6. So it's a little bit on the negative side here. So we expecting a contraction, but nevertheless, as technical traders, what is most important for us is to see how market participants will anticipate this event. And of course, prior to that event, maybe like an hour or 30 minutes into the event, I know that some data will be seeping into the key players in the market, and they will definitely be building up their positions ahead of the event, which usually forms patterns on the chart, which is what we as technical traders are looking for. So with that being said here, and with the informations we have gathered, let's dive right into the chart and let's look at things from the eyes of price action. Now, talking about price action, the first asset we are going to be taking on, it's going to take some time as always. So let's take some couple of seconds off to see. And while I do that, I see a couple of comments here from Torres Master with his usual narrative. Good morning to you, Torres Master, and thank you very, very much for your consistency, I will say. And then Eric Mudavadi, good morning to you. Hope you are doing well. I'm doing very well here, and thank you very much. In fact, we're already witnessing the Hamatan season as the wind is already howling at this particular point in time. What is it like from your own environment out there? Ronald Calvin, good morning to you. Victor Olushego says he is new here. Hello, Victor. How are you doing? Glad to have you around with us this morning. And I do hope that you will stay tuned in so you don't miss out on any of the valuable ideas we will be discussing here today. So here we go. The chart is finally loaded. And at this point, we will be starting with the USOILSPOT for today. Now, so far this week, we've done pretty well on this particular asset, though we had some couple of losses at the beginning of the week, and after that we had a situation where we had sell position, and of course we also had buy positions during the second half of the week, and we've done phenomenally well so far this week. Now let's quickly run through how the week started for us all in this community, especially for those who are just joining us for the first time, so they can also be on the same page with us. So at the beginning of the week, let me zoom right in. So it all started with a little bit of bearish momentum where price action transitioned into a range. And in fact, we saw price action confined within the $72 area, which happens to be our key level for the week. And that reminds me, for those of you who have not watched my video, my weekend videos on all of the assets we are talking about here, I encourage you to watch them, as in those videos I was able to do a top-down analysis of this asset right from the higher time frame, where I was able to identify structural patterns that we want to be using to guide our trading decisions for the week. Now in the Forex Morning Mastery, we only focus on the 1 hour time frame, which happens to be our execution time frame. So if you do want to have a background knowledge of how we got to this point from the higher time frame, then I recommend that you watch my weekend videos. The links are right in the description box of this current video you are watching, so you can check them out after the live session. So with that being said, let's go back into the chart. So initially we saw price action confined within a range that is between the $72 area and the $71.38 level. And in fact, price action was indeed trading below our key level. And of course, you know how we use our key levels in this community. As long as price action remains below the key level, we want to continue to look out for patterns and structures that support the idea of selling that asset. And not unless price breaks out of the key level can we start considering buying. And for the first day of the week, price was more or less trading below the key level, and as a result of that, we positioned ourselves just right below the $71.38 level. That is the support line of that range we identified there to signal our first sell position for the week. Now we had some couple of more sell positions triggered at that point, though we had our sell stop moved, price came back into the entry point, and for those who missed out on the first one, had the privilege of joining. But what happened here, the sell position failed as we saw buy pressure resume, hereby giving us our first loss for the week. Now things went on quite ironical as we saw price action again triggered our buy position order at the top of the $71.98 level, and immediately, I think within 2 hours, we got taken out of that position in a loss as well. And while we were deliberating on this current market setup on Monday, we did talk about the importance of this ascending trend line that captured the series of higher lows since last week, Thursday. And one thing we acknowledged at the beginning of the week is that this trend line is going to continue to guide our uptrend scenario, that is if price action continues to find new highs. However, we did emphasize that if this trend line gets broken, which of course interestingly shares a beautiful confluence with that support line of the channel we identified earlier, we will be looking out for selling opportunities. And of course, with a sell stop order around that area, we got another sell position triggered. And in fact, if you'd missed out on that opportunity, the market was kind enough to come back and retest the structure to incite a decline to the downside. So we were privileged enough to capitalize on that selling opportunity the third time, and this time around it was successful. Remember, we also added more positions at the breakdown of the $71 area. So on this single move, we were able to make over 300 pips on that first one, and the second one moved over 270 pips, after which we moved our stop losses accordingly on Tuesday / Wednesday's trading session to protect our positions. And if you had done that, you must have been taken out with a reasonable amount of profit. Now, right here on Wednesday, we begin to see some interesting situation unfold on this chart, and coupled with some fundamental factors which we actually discussed during the course of the week, that led into a situation where price was confined within the $69 level and the $68 area to emphasize the level of indecision at that point. And if you remember vividly, I was saying here that it is very, very possible that we could have a reversal setup unfold around this area. And I also mentioned that the only condition that will make me want to continue selling or add more sell position is for price action to break down the previous low, the weekly low at the $68 level, which of course never happened, hereby negating any idea of even considering selling. So with that in mind, we had our buy stop order just sitting above the $69 area, and in fact we were able to capitalize on that trend. And for those who missed out, there was an opportunity to join as price action came back to retest the structure and continue to the upside. And since then, we have been buying this asset, and along the line, I've scooped in over 650 pips on this one. Our first buy position was here. We added more positions. Remember, we marked out these levels, had a $70 area. We also added more at the breakout of the 71, and then at the breakout of the $72 area too as well. We added one more position, making a minimum of 4 buy positions running in profit right now. And for those who had capitalized on this move, well done, and kudos to you for being on standby to capitalize on this move. Now, as it is right now, you know what we are going to be doing next. If you have been with us, the next thing we want to be doing right now is to ensure that we move all our stop losses and secure this current buy position, as anything could happen at this juncture in time. Now, if you would ask me, I will be suggesting that anywhere from the $71.70 area into the $71.20 levels seems most appropriate to secure this position. And remember that you do want to be giving enough breathing space for price action to move around. So with a well-secured position at this juncture, what is going to be our next line of action for today? Are we going to continue buying, or are there chances that sellers could come in? And remember that today is the last trading day of the week, and there is always this psychological expectation when majority of the market who had bought at a cheap price, and as they get prepared for the weekend, they want to be taking some profits off the market, which usually reflects on the chart as probably a retracement phase, a choppy situation, or price action moving in the opposite direction of the prior leading price action. So because of this, we cannot ignore the potentials of the sellers. And as well, we also have some fundamental factors which is also affecting the market sentiment. So yesterday we got a report from the EIA, that is the International Energy Agency, where they brought out an optimistic forecast for oil demand for 2024. And and according to the report, they said here that global oil consumption is expected to increase by 1.1 million barrels per day in 2024, which is something very, very positive for buyers in this market. If that is going to be the case, then there is a chance that price action will rise to the upside. And in fact, there is this general conception that the price of US oil is going to be averaging around $84 throughout next year. So this is something very positive for investors in the oil. And as a result of this, we've been seeing some traction in this market. Then additionally, there has been a recent recent positive development as regards to the Chinese economic data, which we learned yesterday that the Chinese government is trying to bolster the economy as they are trying to push in some funds. I think I had some narrative here which I did write out, which I would like to read to you. Now, yesterday, the National Bureau of Statistics of China recently disclosed that industrial production saw an improvement, rising to 6.6% in November. That's quite a huge contraction compared to the previous one at 4.6%, surpassing the market expectation of 5.6%. On the other hand, China's retail sales experienced a growth of 0.1% from the previous 7.6%, but it fell below the market consensus, which had an expected 12.5%. So it shows that the Chinese economy is gradually becoming resilient after a month or two of being on the downside. Now, additionally, the People's Bank of China also opted to maintain the 1-year medium-term lending facility rate at 2.5%. Alongside this decision, the central bank addressed the maturation of 650 billion yuan worth of MLF loan by injecting a substantial 1.45 trillion yuan and increased effort to fortify liquidity in the banking sector. So this is a renewed way for the Chinese government to ensure that their economy is resilient. And of course, this is a very positive signal for the US oil market. And how does that affect the US oil market? Well, we do know that China is the largest importer of crude oil in the world. And if the economy of China is doing very well, then the chances of an increased demand is also on the table. And if there is an increased demand, what happens? Price, of course, will soar to the upside. So everything is lining up in favor of the US oil as we gradually head into the end of the year. And as a result of this, from an holistic perspective, we're still going to maintain a bullish outlook on this asset unless the current structure states otherwise. Now, in that regard, how do we prepare ourselves for today's trading session? Well, first of all, let's look at what is going on from this perspective. Now, if you look at the structure, price action right now is around our key level, which is situated at the $72 level. Now, at the $72 area here, which happens to be our key level, we do know that when price action remains above our key level, we of course want to be looking out for more opportunities to buy. Now, in that regard, I already have a buy stop order sitting above the $72.70 area, which happens to be the highest point price action has been for this week. Now, I'm hoping that price will continue to the upside, and if it does, I hope it triggers my buy stop order so we can continue the momentum. Another thing about the structure is that price action is currently trading above the range we identified at the beginning of the week. So the range has finally been broken to the upside. Remember that there was an attempt to break out of this level at the beginning of the week, which actually failed for us, leading into a loss. But right now, the price action has broken out of that range. Let's see if the market is going to find some bullish momentum around that area to maximize that uptrend scenario. So we maintain a bullish bias on the US oil spot. However, if price action continue to find selling pressure, remember we saw selling pressure around this area during the later part of the New York session, and since then our buyers are yet to find a new high. So instead, we have a lower high at this point in time. Now, if this sell pressure persists and we have a situation where price will break down the $72 level, and of course, I will need a retest of structure and continue selling pressure below this area for me to join a decline to the downside. So this is the only condition for me to consider selling this asset, as this will be a reflection of profit-taking activities from market participant ahead of the weekend. So our center of focus for today is basically around the key level at the $72 area, and depending on how price action reacts to the $72 area will determine what our next line of action will be. So we maintain a bullish bias, looking out for more buying opportunities above the $72.70 level, and then if price breaks down and reaches the $72 area, then we will definitely be looking out for selling opportunities. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So these are my views. If you have any questions whatsoever, feel free to drop your inquiries in the comment section, and I'm willing to be of help in that regard. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, and you can as well use that time to mark up these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right, so I see a couple of comments here, and Torres Master says, okay, all right, no problem. Victor Olusegun is asking, please, can you pin the video? I'm sorry, I'm not sure I understand what you mean by pin the video. Please, I would like you to rephrase that statement so that I can understand what you're talking about. And you see that, please, where do we set our buy stop order? Okay, so I just explained a couple of minutes ago on how we are going to be managing our positions here. And one thing I will advise you to do, Victor, is that I would like you to spend some time with us, and with time you get to understand how things work. Okay, for today, you can just follow along with the session, and by Monday you should be able to get an idea of how we do things in this community. But first of all, I did mention earlier that we are maintaining a bullish bias on the USOILSPOT, and that for us to join another wave of bullish momentum, if that happens, we want to be having a buy stop order above the $72.70 area to capitalize on the uptrend move. And we did mention that if price action does break down the $72 area and we continue to have selling pressure below this level, then we will be joining anywhere below the $72 area to join the decline to the downside. I do hope I made myself clear there, Victor Olusegun. And I would also encourage you to just follow through with the process, and I'm very sure with time you get to understand how things works in this community, and you will be able to use the information gathered here to make your own independent trading decisions. Okay, I hope I'm very clear on that one, Victor. All right. So, in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, we will be moving on to the next asset on our watch list. So the next asset on our watch list is the GBPUSD, the cable market, which of course has also done very, very well for us since the beginning of the week, as we currently are running with over, how many pips is that? I did mention that this morning, over 700 pips in profit on the GBP buy position. As at the time I shared an update this morning on this asset. But we begin to notice something interesting going on right now as continued sudden pressure persists below the 1.27800 level. Now, to buttress what is really going on right now, so we can have an idea into what is happening behind the scenes. Currently, the stability of the GBP USD has been supported by the hawkish outlook from the Bank of England and a dovish pivot from the Federal Reserve. Yesterday, we had the interest rate decision from the Bank of England, and they actually maintained the interest rate at 5.25%. And of course, the Bank of England Governor Andrew Bailey's also indicated that there's still work to be done before inflation aligns with its target of 2%. Now, with this statement, it's more or less like an hawkish statement that is the Bank of England is still ready to increase interest rate for a long time, as long as the inflation in the economy is still very sticky. Now, this for us and this for investors is an open window that of the idea that interest rate is likely going to be increased, and when there is a possibilities of interest rate increase, definitely investors will want to bet on that particular asset because of the return on investment they stand to gain with the variance between the interest rate on the pound sterling and of course from the US dollar. So with that perspective in mind, it is still very bullish at this particular point in time, but that doesn't mean that we will not we will negate the idea of sellers coming in, as we could still see some retracement happen any point in time. And for today, everyone is awaiting the S&P Global publication from both economies, which will of course be giving us more cues into how the economies are doing, and that will give us and we want to see how the market participant will react to this event. Now, with that being said here, let's look at the structure and see how we will position ourselves for the next move. Is the bullish momentum still very possible today, or are we going to be seeing some profit-taking activities, which is always peculiar with last trading day of the week? Now, let's look at things from a technical standpoint and in fact start from the beginning of the week, what has really been happening in this market since the beginning of the week. Now, at the beginning of the week, it was more of a consolidation phase for the first 13 hours, as we saw price action confined within the 1.25580 and the 1.25350 level, giving us an insight into the level of uncertainty going on at that particular point in time. And coupled with the fact that price action was sitting above the ascending trend line we identified on the higher time frame, we were maintaining a bullish bias in that regard. So we positioned ourselves just above the resistant line of that channel at the 1.25580 level to capitalize on the uptrend. And in fact, we saw multiple buy positions during the course of the first 2 days of the week. Price kept on buying above the 1.25580, but it didn't move that much, maybe around 30 to 35 pips before it drops back into the entry point. Now, not until Tuesday we witnessed some volatility in this market, which was as a result of the CPI data from the United States. And of course, we did mention on that Tuesday that if price action at any point in time breaks down that ascending trend line, it will be a good opportunity for us to sell. We did sell here. Price moved a little bit well, as we saw price move about, how many pips was that? About 40 pips. Remember, we had this level at the 1.25500 area as an area we shall be looking out for selling opportunities, which actually happened and pushed price to the downside. Then on Wednesday, we talked about the potentials that buyers can come in, and I can remember mentioning that if we are going to be buying, we can't buy anywhere below this ascending trend line. Of course, we would need price action to climb back above the ascending trend line so that we confirm that buyers are back into their territory. And as a result of this, we had this level at the 1.25700 area as an area to look out for buying opportunity. Though some of us did buy around this area, I got some reports, I got some messages from some of us who bought around this area, and they were able to capture that bullish momentum early enough. But for me, I actually joined above the 1.257, though it was a little bit late as we missed out on over 50 to 60 pips of that bullish momentum as price continued to climb to the upside. And in fact, we had multiple levels that we did identify to maximize the potential of that move. So we had buy stop orders above the 1.259, then we have the 1.26 area, then we continue to add more at the breakout of the 1.265. This was right here yesterday. We also had it again. I did updated us on both my TradingView and Telegram platform that we should be adding more positions at the breakout of that structure. And we had a minimum of 1, 2, 3, 4, 5, 6 positions prior to this morning session. And for those of us who are part of this profitable journey, well done and kudos to you for being on standby to capitalize on this move. Now, as it is right now, it is very, very important to secure all positions, and I did mention this during my commentary this morning. So for me, I think around the 1.27350, anywhere around that area will seem most appropriate. And while you're moving your stop losses, please ensure that you give enough breathing space for price action to move around, just in case we could witness some volatility before price action continues the uptrend scenario. So with a well-secured position at this juncture, what is going to be our plan for today? Are we going to continue buying, or are there chances that price could retrace to the downside? Now, look at this structure here. Now, for those of you who are okay, let me just go into the 4 hours time frame here so we can see how things are looking like from an holistic perspective. Now, on the 4 hours time frame, remember that we did confirm that price action has been bullish since the month of October. And in fact, we have a couple of ascending trend lines to buttress the strength of the buyers here. Now, price respected the ascending trend line this week, as you will see right here. And of course, thank goodness we were able to capitalize on that opportunity. Now, the question here is, are we going to see a retracement in such a way that price action may come back into the ascending trend line to incite another uptrend momentum? And if you look at the distance between where price action is right now and the ascending trend line, we have a minimum of 130 pips thereabout. Now, in this situation, we do want to be capitalizing on this move, as it's quite a significant number if truly price action will retrace to the downside. So what we are going to be doing on the 1 hour time frame is to see how to capitalize on that if it so happens that market participant will want to be doing some profit taking activities today. Now, with this information here, I just needed us to see what things are looking like on the higher time frame. Now, going back into the 1 hour time frame, you begin to see that market is currently going through a consolidation phase, which is not a surprise to us at all. We do know that when market participants are anticipating major events such as the S&P Global publication, we usually see a lot of key players in the market step aside from the market, hereby causing a reduction in volatility, which usually reflects on the chart as consolidation phase. So at this point in time, we can see price action is currently confined within the 1.278 and of course the 1.27460, I think 1.27460. So we do want to be marking this one right here, and here we go. So we have a range right now where price action is confined within right now, which further emphasize the level of indecision going on in this particular market. So let me zoom it in so that we can see things clearly, as this is where our center of focus is going to be for today. Now, hold on a second. I'm looking for the down arrow. So let me just borrow this one from here and place it right in this place. So I will just zoom back in so that we can see things clearly. So we have a range to work with for today's trading session. And of course, you know how we attend to flat channels like this. Whenever we identify them on our chart, we usually exercise patience and wait to see price action either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And for the fact that throughout the Asian session, we continue to see selling pressure around the resistance line of this range, it appears that selling pressure is persisting at this point, which may incite a downtrend scenario. Now, for counter trend traders, let's see if we can capitalize on this bearish opportunity. But for me to sell the GBPUSD today, you want to see price action break down and retest the structure at some point before I join the decline to the downside. And now, while we join the bearish momentum in this market, please note that this is a counter trend opportunity. And what this simply means is that you do want to be on standby to move your stop losses accordingly as soon as price action moves in our favor in the direction of the downside. Now, moving your stop loss, what it does is it helps us protect the existing position, because the fact that price action is the nature of this price of this market is still bullish. Buyers could come in at any point in time along the bearish momentum to incite an uptrend continuation. So because of this, you always want to be on standby to move your stop losses accordingly. And if I am selling, I'm not adding any positions to my sell positions because I'm trading against the trend. So I want to see how the market would react to this ascending trend line, and that will determine if we are going to be adding more sell positions to our existing trade or probably getting ready to buy, which is dependent on how the market reacts to that trend line. So if we at any point price gets into this level, we begin to see buy pressure, it could welcome buying opportunities, and a breakdown retest will definitely welcome selling opportunities. So that is my idea as regards price breaking down the 1.27460. Now, in as much as we have talked about the potentials the sellers have here, I'm still going to be holding on to the bullish outlook as we could still see price action continue to the upside. And in that regard, placing a buy stop order above the 1.27800 level makes quite a lot of sense as we look to maximize the potential of this bullish move. So our center of focus for today's trading session is simply within this range, where depending on how the direction of the breakout will determine where price is likely going to be closing for today. So let's mark out these levels on our chart, and of course I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So this is my simple perspective on the GBPUSD for today. So if you have any questions and probably want some clarifications as regards to the current setup, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the last asset on our watch list for today. All right, so in the absence of no questions, I want to assume that we are all on the same page, and in that regard, will permit me to, of course, move on to the final assets on our watch list for today. So the next asset on our watch list for today is my favorite asset, which is the XAUUSD, popularly known as the gold spot. And finally, we have price action break back above the $2,040 level, which we identified during the XAUUSD live window yesterday, and price action continues to maintain the bullish bias so far. Our journey continues to be marked by success as buy positions. All our buy positions since when was that? When did we start the buy position? Since Wednesday's trading session. So it's been 48 hours now, and all our buy positions still remains intact as we have 1, 2, 3, 4, and 5, 6 buy positions totaling over 1,650 pips in profit right now. The gold will be considered to be the most profitable asset in our watch list for this week. And for those of us who capitalize on these opportunities, well done, and kudos to you for being on standby to capitalize on this opportunity. So, as is this right now, market sentiment reflects nearly 60% likelihood of the Federal Reserve initiating interest rate cuts in March 2024. Now, with the odds of a mid-rate cut currently standing at 90%. Now, this expectation is going to be capping the significant upside of US bond yield and consequently lending support to safe haven assets such as the gold. Now, we will maintain a watchful eye on all our buy positions, of course, and we do want to ensure that we move all our stop losses accordingly to secure this current buy position, as we never can tell. We could see some volatility happen today as market participants gear up for the economic events that we talked about earlier, that is the S&P global publications on both the service sector, the manufacturing sector, and of course the industry sector as well. Now, with the situation we have here, I will be advising us to move all stop losses around the $2,029 area. And in fact, remember that you do want to be given enough breathing space for our price action to move around. Remember, the XAU is a very volatile market, and where price could move about 60, 70, 80, 800 pips if it does its volatile movement. So let's ensure we have enough breathing space for price action to move around. Now, with a well-secured position on the XAUUSD, what is going to be our plans for today? Well, if you look at the structure, for me, it appears that we have a valid uptrend continuation pattern. So if we take into consideration this impulsive move that brought us into this point where price action fell into a range, you will see that we have something like a bear bullish rectangle pattern, which is more or less considered theoretically to be an uptrend continuation pattern. And if price will break out of the resistant line of that channel, this will give us a good opportunity to add more positions to our existing trade. And so far in the last 2 days, price action has already broken out of the resistant line more times than it broke down the support line, as you will see right here. So the breakdown of the support line at the 2029 wasn't that significant, as sellers were unable to settle below that area, which further emphasized the strength of the buyers within the range we are in right now. So anywhere above the $2,040 level still seems most appropriate to feel comfortable in a buy position, and I do hope we all capitalized on the breakout of the $2,040 area. Now we have the highest point for this week right now at the $2,048 area, so you do want to be marking that level out too, as well, as we will be using that to maximize the potential of this bullish move. So I will be labeling this one, and we have the $2,048 level. So I will just place this at the top right hand corner, and we shall be looking out for more buying opportunities above that level. So you do want to be marking that level out as we look out for more opportunities above that structure. Now, in as much as we're looking out for buying opportunities at this juncture, we cannot ignore the potentials that sellers could come in. Remember, I did mention today being the last trading day of the week, it is very likely we see major key players in the market take some profit off the market in preparation ahead of the weekend. And if this is going to be happening, well, this does not negate the bullish outlook in this market. It could more or less be a retracement of that impulsive move that we have here. Now, for me to sell at this juncture, I would rather want to see the $2,029 level taken out. That is price action, take out all the sell positions within this area. Those who had placed some buy positions, those who had placed some buy limit within this area, break the structure down, then gather some liquidity by taking out all the buy stops and then join to the downside. So this is what I will be looking out for to sell the XAUUSD. Breakdown retest of the 2029 could see price action spiral back into our key level at the $2,000 mark. So let's see how the market will play out today. Our center of focus for today is basically between the 2040 and the $2,029 area, where depending on the direction of price action will determine where price is likely going to be closing for this week. So I still maintain a bullish bias here. I'm strongly bullish on the XAUUSD, and like I said earlier, all the fundamental factors we talked about earlier are all leaning towards supporting the gold spot to continue to rise. The US Treasury bond yield is not doing very well. The US dollar is not doing very well. And we have geopolitical tensions in the Middle East, which of course always supports safe haven assets such as the gold. And right now, majority of participants are already betting on a rate cut by the first quarter of next year, which makes the US dollar at this moment not looking very, very attractive at this point. So we maintain a bullish bias here and continue to look out for buying opportunities above the $2,048 mark. Now, we shall continue to monitor the XAUUSD during the XAUUSD live window. I already dropped the link to the XAUUSD live window right in the comment section of this video you are watching. It is pinned at the top. You want to be clicking on that link. Click on the notify me button so you can get notified as soon as we come on live. Now, for those who don't know, the XAUUSD live window is a platform that was born out of popular demand from members of this community, where we come together to monitor real-time price action on the XAUUSD during the New York session every day. Now, the session usually kickstarts about 5 to 10 minutes into the New York session, and it usually lasts between 5 to 7 hours depending on the tenacity of trading activity for that day. So you want to be part of that session so you don't miss out on how we manage our positions real time on the XAUUSD. And on this note, I would want to be rounding off gradually, but if you have any questions as regards to the XAUUSD, feel free to let me know in the comment section below. And if you have found this session and content useful in making your independent trading decisions for today's trading session, I'll really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. Thank you in advance for doing so, and thank you for helping the community to grow. For those who had already clicked on the like button, thank you very, very much. And for those who are yet to, this is the cheapest way you can support this project, and I really do appreciate your support. So with that being said here, let's see if there are any questions whatsoever before we round off for today's trading session. I saw Victor Olusegun retract his messages. Okay. All right. So let me see if there's any questions, and we will be rounding off in a moment. Thank you very much. All right, so in the absence of no questions, I want to assume that we are all on the same page, and I do hope you were able to mark out all these levels on our charts, as we will be needing them to guide our independent trading decisions for today's trading session. And it has been a wonderful moment. Okay, I saw your comment, Victor Olusegun. It's okay, no problem. I was just wondering why the message was retracted. That is all. It's okay. With time, just spend some time with us. Trust me, the more time you spend with us, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So we are glad to have you around with us and looking forward to see more of you later in the future. So far this week, we've done very, very well on all of the assets we did so far this week. Everything went on very smoothly and, in fact, went on significantly well in the direction we had opted for. Though we had some couple of losses, this is where tenacity is very important, patience is very, very important, and the ability to stay in alignment with one's plan pays quite a lot of profits along the line. So we had some couple of losses, but we stayed true with our plans, and finally we were able to recoup the losses we had, and of course made some significant amount of profits on top of it. And this is one thing that we've continued to maintain in this community. So we attended to the USOILSPOT, we attended to the GBPUSD, we also treated the XAUUSD, all of which we were able to identify simple trading setup using only fundamental tools such as trend lines, key levels, and chart patterns to strategically position ourselves for the next big move that will happen. So I hope we all marked out this level. And one thing I usually say here is that everyone should exercise patience and allow our structures to mature before we jump into any positions. And always remember that every decision we make in the financial market is more or less an educated guess. Hence, you want to make sure you have a well-defined risk management strategy that remains consistent with all the positions from your portfolio at every point in time. So I wish you all the best of luck today. And tomorrow's the weekend starts today already, and tomorrow I will begin to churn out my ideas for next week. So if you had not subscribed to this channel, I encourage you to do so, as by subscribing you will always get notified as soon as I drop new videos and ideas on this channel. So click on the subscribe button and be part of this community to be involved in our subsequent videos. So it's on this note, and for those who joined us for the first time, I didn't forget you guys. I do hope you had a wonderful moment. I hope you gained one or two things from this particular session, and if you did, I look forward to seeing more of you in our subsequent editions. And trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So I look forward to seeing more of you. We'll see in the comment section as I start churning out my preparations for next week, and of course during the Forex Morning Mastery next week, as we come here again to review the market and prepare ourselves for the new week. On this note, I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful weekend. Have a good day, everyone. Bye-bye.